Good afternoon, and thank you for coming to the Insurance Committee meeting of the employees of Lafayette Parish School System. Mr. Lynn Fontaine with HUB is going to come up and give you a report of the state of our health plan as we ended in December 2016. He gave a similar report to the board a few weeks ago, and we had members ask if they could come and deliver it to the committee. So we appreciate your time. I'll turn it over to Lynn.
Just wait a second, make sure everybody's got a copy. All right, if everybody could turn to the first page here. And as this is all information as of the end of 2016, your plan year, of course, is a calendar year. The first page basically summarizes everything, and you can see at the top from a total participation standpoint, really no change in total participation, 5,505 total participants. Participants either mean an employee or a retiree. This is not the number of full membership under your plan, so it does not include dependents. So you can see that on the Blue Cross side, we went down just a little bit. On the Humana side, up just a tad. From a total claim standpoint, we've gone from 42,608,554 to the 46,129,798. That's an 8.5% increase in our total claims. Claims net of any reimbursements. Reimbursements are going to be in the form of any type of reimbursement of reinsurance. We protect the plan with reinsurance. Claims that go over a certain amount on an individual, or any type of drug subsidies or subrogation, anything like that. Our net paid claims number 8.4% over the previous year. Total fixed cost stayed just the same, actually decreased just a tad. And then, of course, with more folks participating in the Humana plan and the increased rates there, you see the increased cost, and then total plan cost up about 8.5%. So the bullets down at the bottom in bold print, your total claims increased 8.5%. Fixed cost remains stable. The funding under that it shows all of the funding from both employee and retiree contributions, and then of course the board contribution, which is the vast majority of it. That funding increased some 10.8%. So you can see that with a total plan cost of $47,273,000 and total funding of basically $48.5 million, the plan did support itself from funding versus claims, but we're very close. 97.5% of the funding was expended in claims, small part of that in fixed cost. On your next page, on page 2, we do all of this on a per employee per month basis, because when you have fluctuations in participation, this is a much easier way to measure the performance of the plan. If we break it down, starting with the claims, our medical claims went up about 5.7%. That's a function of an increased number of high-cost claimants that increased our inpatient and outpatient hospital utilization. Prescription drugs went up 13.9%. If you look at the bullets down at the bottom, the increase in the prescription drugs is due to a number of different things. Increased utilization in the number of prescriptions prescribed to our members, increase from the cost of the drug manufacturer. You know that we went out and negotiated a better deal on our prescription drugs, but at the same time we're still dealing with the increased costs from the manufacturers and greater utilization of high-cost medications. in any area of a large self-funded plan that we are concerned about, it's prescription drugs. These specialty medications, high-cost medications, are predicted to be as much as 50% of our total prescription drug claims within the next year and a half, 2 years. Predictions are by 2020 that prescription drugs will be as much as half or 50% of our total claims expense. Part of that is good. Part of that comes from it's much more cost effective to control somebody's cholesterol than to have a bypass surgery. Okay? It's much more cost effective to control high blood pressure, all of these other things. But at the same time, several of these high-cost medications are becoming unaffordable, so something needs to be done about that, and we're going to be looking at a number of different solutions there. So overall claims up at 8.5%, the funding up 10%. When we do it on a per employee per month basis, only really was about a 2% increase there. But we've supported the plan with the funding from a cost standpoint. On page 3, you'll notice that participation has remained very stable, actually decreasing less than 1%. And only increasing 6.4 since 2013. What's going on is your employee-only participation is actually going down, but employees covering dependents is going up just a tad. One thing that we're really watching, especially with the all patch down here, and I've said this repeatedly, especially to groups like you and other municipalities in the area, as the all patch lays off employees and has been for quite some time. That's a qualifying event for them to come on. I have not seen that really hurt your plan from a participation standpoint. Many other school systems or other municipalities, you look at the data on the membership, and they're actually expending more on spouses than they are on their own employees and retirees. That's not the case here, but we're watching that very closely, and hopefully we've kind of weathered the storm on that, because most of the all patches participation is starting to stabilize now. Kind of more depicted on the next page here. You see, when I told you about participation in the beginning, and participation means employees and retirees, membership is the total number of bodies, belly buttons, are members covered under the plan. So your membership has increased less than 1%, 7.2 since 2012, and it's not outpacing the growth on your active side or your employee retiree side. So all good, and that's shown on page 5. If you look at the numbers in the charts at the bottom and focus on 2016 and even look at the years before that, on a per member basis, we expended $489.59 on employees, spouses $458.57. We have several groups that the difference between the employee and spouse, we pay anywhere from 50% to some as much as 150% more on the spouses than we do on the employees. So that could present a huge problem, but I'm pleased to tell you that that is not going on right now. Medical claims, this just graphically shows the medical claims over the last several years. The 5.7% increase this year is purely from an increase in high-cost claimants. Part of that also coming from a decrease in the out-of-pocket maximum from our benefit structure there. We talked about prescription drugs. 13.9% increase year over year, increased number of prescriptions, increase in the cost of medications from drug manufacturers, and increase, most of it coming from an increase in high-cost medications. Your top 10 medications by dollar amount increased 13% on an employee per employee per month basis. Prescription drugs represent 36.1% of your total paid claims. Total paid claims, as we stated before on page 8, graphically shown an increase by 8.5%. Total plan cost on your next page, 7.7. Average of 3.6% since 2012, much lower than industry trend. If you look at page 10 on claims by type of service, when we talked about the increase in our medical claims, you see that these numbers in parentheses down at the bottom in the chart, for example, hospital inpatient in 2015 averaged $147 per employee per month. Increased to $156, that's an increase of 6.1%. Outpatient, $113 versus $133, that's 17.7%. Most of that increase is because we had an increased number of cancer claims this year, which were usually result in outpatient chemotherapy. Page 11, one of the major reasons why you were at Blue Cross today and have been in the past is because of their discounts in their network. Okay? Their discounts in their network in 2016 averaged 68.7%, which is huge. At the same time, on page 12, 98.2% of all claims were paid in network. So it tells you you got fantastic discounts. You also had fantastic choice of hospital and doctors because not many people needed to go outside of the network or chose to go outside of the network. Prescription drug utilization by number of scripts. 85% of your prescriptions were generic. Now, I can tell you from a school system that has the majority of both your actives and retirees under the Blue Cross plan, that number is phenomenal. You guys, as far as the municipalities that we represent, you're at the top of the chart there with 85% generic utilization. At the same time, when you turn the page, 85% utilization only amounts to 27% of the total dollars paid. Tells you the significant difference between brand and generic from a cost standpoint. Even further exemplified on page 15, these are your top 10 medications by dollar amount. These medications only represent 1.7% of your total prescription drug claims and nearly 20% of the total dollars. And you can see we went from $41.10 on a per employee per month basis to $46.45, that being a 13% increase. On page 16, when we talk about the cost of administering the plan and protecting the plan, there are fixed costs. Before we pay one dime of claims under the plan, we have to have a network. We have to have somebody to adjudicate claims, and that's Blue Cross. That's Blue Cross's responsibility in the plan. And then we've reinsured the risk if we have a high-cost claimant to where we've capped our risk with reinsurance. Those two components are the fixed cost of the plan, and as you can see, together, they amount for a very, very low percentage of the total cost of your plan. You're running your plan for less than 6 cents on a dollar. Okay? If you were fully insured, not self-funded, that would be a much, much larger number. And we had actually some reduction in cost on the reinsurance this year through our marketing and negotiations there. On page 17, 18.2% of the members of your plan are responsible for 81% of the total paid claims. Flipping the coin on that, or in reverse of that, 81.8% of your plan members have claims of less than $5,000 a year, and only represents 18.9% of your total paid claims. All of that being said, from the first page, you know that we came very close this year. 97% of the funding was expended. And with regard to increases, I think prescription drugs is probably the area that we need to center most attention on, and we'll be looking at a number of different alternatives to mitigate that cost increase. Questions?
On the drug part of it, are we looking at maybe going another search for another company to give us the prices that we got now? I mean, this looks really good. The pharmacy vendor that we have right now, and looking at the contract, that is very, very competitive. And at the same time, if you remember from the presentation, they will automatically go to the marketplace, shop our contract every year. So we're going to stay competitive in the area of the contract. And what that contract controls is our dispensing fees. That contract controls the discounts involved, all of that type of thing. The other ways to control the cost of prescription drugs are we look at the list of approved medications and make certain that that does not need to be tightened. Are we paying for medications that aren't, that there are several cost-effective alternatives to that might no longer need to be on our list? Other alternatives are to maybe look at a smaller network of pharmacies, things like this. We'll present all of them, look at all of them, weigh the pros and cons out. What are the plans, since we're so close at 97%? Are we planning an increase in premiums? Is there anything going on right now for increasing the premiums for our plan?
That's always going to be under discussion, but that would be presented at upcoming meetings.
Okay.
All right. Thank you very much.
Are there any questions?
No.
Yeah.
I have questions.
Oh,
My question is this, and I want you to use me for an example, if possible.
hang on. Okay.
Can I even take this out?
Carol Broussard. I'm on Medicare, primary, Blue Cross secondary. I want to know, do I still have a $950 deductible? That's my first question.
No, ma'am.
I just recently got this. It's not a bill from Blue Cross. And it says that in 2016, my deductible was $950. Now, in 2016, I had Blue Cross Blue Shield as my primary for part of the year. Then I became Medicare. So my question in 2016, was I under that $950 umbrella? Or did I switch over to the Medicare? That's my first question. Then my second question, because I kept all my paperwork for 2016, and I want to know that $950 deductible, the $250, because I did go online last year, and I had to do the wellness online. I want to know where that $250 deduction in my deductible, where is that reflected? Because I can't find it anywhere.
Well, first of all, retirees on Medicare, it doesn't matter if you do the wellness, it's not going to affect you because you're not subject to that $950 deductible. Those explanations of benefits are programmed. So in other words, in their system, a basic PPO person, it's going to populate that as $950. But when they adjudicate your claim, they're going to show that Medicare is primary, and they're going to waive it. That's how that works. So, and I'm glad you're doing the wellness, and that's why we offer it to everyone, but it's not going to affect your deductible.
I'm not Medicare eligible. I want to know, where am I going to find that $250? Because I kept all last year, and I can't find it.
Well, yes, what happens is, well, what it is they put $250 credit in their system towards your deductible. So you only meet $700. Those people only, like I would only meet $700, and then it was showed it's satisfied. That, like I said, that number is not going to change because it's hard programmed in there to populate that field. You're not going to see it. We have to call Blue Cross and ask them to check in the file if we want to make sure.
Can you use me as an example? And I'm asking you to prove to me that it was reflected in my account somewhere, that $250, because people are asking me, but then how do we know that, these people are going online? I don't have to do it anymore, but they're going online assuming, but if they're like me, I kept all my paperwork for a whole year. I can go back. You don't see it. So I want to know, where you're going to find it. And hopefully Mona should be able to answer that because she's in insurance.
I told you, we have to call Blue Cross, and
Use it as an example and get that for me.
it's not going to be in yours because you're on Medicare. I would have to look at mine, for example.
Well, I'll find anybody. And I could ask one of my friends to call you.
So Lisette Henderson. So my daughter had to get 31 Botox shots for migraine headaches, and I didn't have to pay the $2,500. I'm on the high deductible. I do keep my paperwork, and at 22, it wasn't even $250. It was a little bit more than that I got credit for. They told me that it was satisfied and we had met the deductible for those shots. So I did not meet my deductible according to my HSA bank account. The credit was already there. So I met a lower deductible. It's like they had given me a gift card or something like that. So I didn't have to meet the $2,500. $250 was less than that was met. Does that make sense to you?
What I'm saying, when I look at my paperwork, nowhere do I find that there was a deduction in that. So that's why I'm asking her. You said that it doesn't say it, but if you look at your paperwork, if you're paying, okay, but I never had a satisfaction. That's what I'm trying to make you understand. I just want somebody to look into that because I think that's a problem.
Okay, thank you. Oh, you.
A member. This is a member. She is 70 plus, I'm going to say. I don't know her age, so I'm not going to say it. But she recently got Part B of Medicare. She does not qualify for Part A because she doesn't have the number of quarters. And her question to me to reflect today is, why can't she get a deduction in her Lafayette Parish School Board insurance, her premium? Because now when she goes to the doctor and have tests done, Medicare will be her primary and Blue Cross will be her secondary. When she goes to the hospital, I'm just reflecting what was told to me, Blue Cross Blue Shield would be her primary for Part A, for hospitalization, because she doesn't have Part B. So her question is, she has Part B, she doesn't have A. Her question is, why can't she get a reduction like people who have Part A and B and have Lafayette Parish School Board as their secondary insurance?
That is because we still pay primary on a section of her coverage. You have to have Parts A and B to get the reduced premium because we're still primary. We would be on active people on Medicare.
Patsy Saunier. My spouse, my husband, Is this correct? For a spouse of a working employee whose spouse turns 65 this year in April, does the spouse continue on Blue Cross Blue Shield insurance as primary and Medicare as secondary until That's correct? Okay. If so, is their deductible as Blue Cross Blue Shield a primary?
Yes, there will be, and those are not our rules, those are Social Security rules. They don't want to be primary as long as there is a working person in the relationship. So he would meet a deductible, yes, ma'am. I don't think so. They coordinate, but unlike we do. No, I didn't think so. We do cover your Medicare deductible, but they don't cover ours.
This is seeming a lot more complicated than I thought. At a recent board meeting, a question was asked, I think by Mr. Knezik, if he could get a number of people within the insurance system that are eligible for Medicare. And I guess that number at this point would not include her husband. Has that been obtained yet? Because it sounds a lot more complicated than I thought it would be.
I can tell you the number of Medicare eligible. That's pretty easy because we run monthly reports. But I think what he wanted was the cost per member per Medicare eligible person, how much their claims cost us. And I haven't teased that out, but I'm sure we can do that, and we can certainly provide that at our next meeting or as we start looking at the budget process. And the rain just arrived.
Once I turn 65 and I'm retired, Medicare becomes both our primaries, correct? Does Blue Cross Blue Shield as secondary have a deductible?
No, ma'am. And actually, when you retire, we can become secondary for your husband. We don't have to wait for you to be on Medicare. Mm-hmm. Correct. Yes, ma'am.
Does that include prescriptions?
Prescriptions are not covered, unless you would buy Part D Medicare, and you don't have to. No, you would be covered under our prescription plan. So with respect to scripts, if you're basic PPO, which you would want to be because you can't use a copay when you have, it wouldn't do you any good. You'd be throwing your money away. But when you have enhanced plan, that doesn't work. We always ask you to get on basic. You have a $100 prescription deductible, and then the copay after that. And then the maximum out-of-pocket that you would owe on that would be $800. And then you would pay 100% after that. So I'm glad you brought that up. Prescription drug coverage is a little bit different. And by providing you with coverage that is at least as good, if not better than Part D, which I can tell you it's better than, at least for now, a lot better. The federal government gives us a somewhat of a reimbursement. They call it a retiree drug subsidy, and they pay us back some of it for our being willing to cover your scripts.
Okay, I'm Butch Mouton. In getting into the Part D for the Medicare, we can do that and still belong to the system here? In other words, we're in our system right now. Can we get into the Part D along with what we have now?
You would be waiving coverage here to take Part D, which you would have a cost to that and a huge reduction in premium. Imagine you could, but would it pay? Excuse me, a huge reduction in benefits. Yeah.
Okay, all right.
And there's a cost to it as well.
Yes. Okay. All right. Well, that was the question. Another question I have, and Mona, this is for you. On those oil field people coming in, are we doing the 10-year thing where we talked about 10% a year? We are doing that, so we're keeping track of that. Okay, that was another question someone had brought up.
I thought we were told that there was a program that we were waiting on for that to actually happen.
The program turned out to be a lot more cumbersome than actually just keeping a spreadsheet, to be honest with you, for the time being. We're working on it, but we would have had to come up with something like 40 new dead bin, or what we call deduction benefit codes to program in payroll. So what we're doing is we're keeping track of it in a different system. I don't want to say manually, but in a different area of Alio. But we are doing it. Basically what we do is at the time someone retires, we check on how long they've served on the plan. Because he could come over and he could serve his 10 years. So we're not putting like a whole list of everybody who's getting on. We're checking those dates as they exit.
We're not looking at our portion of payment when they enter. Wasn't there like a certain percentage was going to be paid every year until they were fully vested?
Right, the vesting's after you retire. How much funding is the board going to continue to pay for you and your dependent depends on your having served the 10 years.
Okay, the other question would be like, for example, a teacher retiring and the husband comes on and basically the last 5 years. So that would be a 50% payment from the board as far as for his premiums goes. Is that my understanding?
Yeah, I haven't memorized the vesting schedule, but assuming it's 50, it's 50% on his share, yes. If she served her 10 years.
Okay, that would just...
That's probably why it got to be so weird and twisty to program Alio. Anybody else? Okay, I'm always here. Y'all know where to get me. Sure. You need it. You don't want
Well, thank you for coming. I really appreciate the press. That's it.